Information that Dan Loeb has taken these new positions in the second quarter, according to his quarterly letter in Disney, Amazon, Alibaba, JD.com. But, guys, we're going to focus on Disney first and foremost. Josh, we can discuss it with you first. I just got off the phone with Dan Loeb, who told me the following about why they initiated this position. And then I can go to some things that are already in the letter. He told me there is no close second to Disney when it comes to an entertainment company due to their intellectual property and their motion pictures. He says they have a slate of what he calls tentpole releases. We obviously know the titles that they have, whether it's Star Wars or some of the others, what he considers big, giant tentpole releases, their distribution network, Disney Plus, et cetera. He said as well, some of the commentary, the narrative that's out there about how Disney Plus is being thought of in the context with Netflix. He said they don't have to compete with Netflix. It's not a winner-take-all environment. They just have to take some market share, a market that he certainly thinks is easily split between those two and even some other players. And he also, which was interesting as well, likened Disney to Microsoft 7 or 8 years ago. You have, a sort of time-old business, and then you get into new markets, and you're able, in some respects, to reinvent yourself, much as Microsoft has done. We know how well that stock has done lately under Satya Nadella. He sees a similar scenario for shares of Disney. Josh, let me get your take on this, and then I'll quote some more from the letter, but that's directly from my conversation with Dan Loeb a few moments ago. What do you think about the Disney buy?
I agree with all of those comments. And one of the things I've been saying about Disney recently is I really don't think there's anyone left to sell. Theoretically, if you were a seller of Disney, you've had 5 months to say they're never going to recover from this pandemic. I want out. The price has been fairly stable after that first sell-off and then recovery. Disney's been trading at a fairly tight range. So there's been ample time for people that thought the pandemic was going to present some existential challenge to the company to get out. They've already done that. Who's left to sell if they're still in it? So I think the Disney shareholder base is now largely made up of people that agree with everything Dan Loeb had to say and see Disney Plus as game-changing for the company, which I think it is as well. And have basically said, I'm going to grit my teeth until the reopening happens, whether it's Q4 of this year, Q1 of next year. The parks will come back. People will want to see new movies again. ESPN will have new sports to air. And in the meantime, look at this fabulous asset they've built up, direct to consumer, does not require the cable companies carrying their channel. And yes, it's world class. It belongs on the same stage as Netflix, and it will be that size in time. So I agree with all those comments, and I think Dan will end up doing well with Disney.
Pete, it's interesting to Josh's point about sort of gritting your teeth a little bit and having to wait a little bit. Dan makes it clear, Dan Loeb does in their letter, their quarterly letter, that they initiated their position when shares traded down on fears of closures of theme parks and movie theaters due to the coronavirus. He said a slew of sell-side analysts had recently downgraded the stock. He says, we believe that they failed to grasp that the pandemic also provided Disney with an important opportunity, that being to accelerate their plan to bring their content directly to consumers. We've seen them do that already. We saw what they did with Hamilton. We saw what they have now said about Mulan and what they're likely to say about other titles as well. But what do you make? I think it's so interesting what he says about this competitive landscape of Disney and Netflix, and then also how he views a company like Disney relative to where Microsoft was close to a decade ago.
Yeah, that's a really interesting comparison. But going just back for a moment here, he talked about when they were selling the stock off, and that was in the early days when we actually saw the stock get all the way into the hundreds. And I still think when I look at Disney right now, Scott, I'll say the same thing. Under 110, that's where you want to buy it. Obviously, the stock got all the way underneath 100 at one point. So it got sold off for all of the quote-unquote right reasons, but people were forgetting a lot of the other side of this, which is what happens on the other side of a vaccine? What happens on the rest of this? Bob Iger set up this company in an amazing way, and what he did was he provided the studios, he also provided the TV, and all of the content that we talk about right now, and that really is the trigger, and that's the one difference that I see is when I look back at Microsoft before Satya Nadella was able to take over, that was a company in disarray. They didn't have a direction. The stock was just sitting there and languishing in the 30s. It had a hard time really moving getting anywhere. The needle didn't seem to ever want to move. And the reality was they had a lot of disappointments when they were doing a lot of what they were trying to do to compete with Apple and all the rest. So I think the reality is it's a little bit of a different story. I see Satya Nadella taking over a company and saying, you know what? We're a cloud company. I come from the cloud. We're a cloud company, and we're going to take on all comers, and we're going to be very aggressive on the competition. That's exactly what they have done. I don't know. In terms of Disney, though, looking at Disney, yes, they've got so many different levers that they can pull. And even with the stumbles, we all know at some point in time, and I've been saying this, we've been buying time. We've been buying time through the Fed. We've been buying it through all these different packages that Congress is putting out there, all for the right reasons, by the way, but buying time. And it's buying time for the Disneys of the world when they can open up the theme parks and people feel comfortable flying to go to Disney and all the rest of it. So it makes a lot of sense. I think the stock it is trading right around at the right level right now. I think you've got to have openings and you've got to have more flow for this stock to actually be a $145 stock again or a $150 stock again. But in the meantime, what a great company that Bob Iger, I think, set up for Bob Chapman. So I think it's outstanding.
Bob Chapek just